Welcome to a brand new episode of Bearish or Bullish. I'm Julie Alexandria here with JC Peretz. We're talking the new minor leaguers list. We're talking some crypto crash and some bonds, if you will. JC, good to see you.
Julie, always a pleasure. Talking about all our favorite things from cryptos to stocks and ETFs and wine and sports. It's better than that.
What could be better? Okay, let's kick it off. First topic, the new minor leaguers list just dropped. What are you liking from that list? And describe for our viewers exactly what it is.
It's one of my favorites because it's all small caps, right? Especially us, it's very easy to get lost in what did Apple do and Amazon and Google and Caterpillar and Freeport and all these massive companies and all the macro analysis that we're doing, that in the old days, these little names would kind of slip through the cracks and we'd be having conversations with our friends. They're like, yeah, this XYZ went up 200%. I'm like, I've never heard of that. You know why we had never heard of it? Because we were too busy with the macro. So over the years, those are kind of lessons that we've learned over the years. So we developed the minor leaguers report, which basically scouts the farm system, right? If you ask any of the old timers, they'll tell you the best winners of all time come from mid caps. So as always, we like to stay one step ahead of the curve here. So if the biggest winners of all time come from mid caps, let's look at small caps from 1 to 2 billion right before they graduate into mid caps, which are above 2 billion in market cap. So that's how I look at that. And then we scan like we always do through relative strength, momentum, just really looking for the strongest names. And then we hand select the best risk versus reward opportunities from the long side. So first we build our scan looking for strength, and then we dive in and we isolate some of our favorite names.
Okay, so who are you liking? Give us some names.
Funny because a lot of the names that are showing up in the scans are actually from the value space, right? A lot of financials and industrials and the types of sectors that have been working that are sort of right in line with our more macro themes, which that are the value stocks that have been doing so well. Industrials and financials right near the top of that list. So I guess it shouldn't be a surprise, but I do love it when our bottoms up scans match up with what we're seeing at the macro level. Those make for the best trades in our experience. I like GMS. There's a few banks that stood out, and I like those too. I like those big bases in the bank stocks. But GMS, I really like. You know why? Because number one, it's leading. It looks stronger than those banks' bigger picture, but it's already bumped up against this level a few times. So, we haven't been waiting, fortunately. Now it's just recently got on our radar, but we're looking for a breakout above 46. So if GMS is above 46, we like it long with a target of 68. The beauty of it is the risk reward is great. Sure, it's an industrial stock. It's about 1.2 billion. It's literally about to graduate into mid-cap status. All that's great. What I really like is the risk versus reward. So 46 is our level. If we're above that, I like it long with a target of 68 GMS. Boom. What do you think about that, Julie?
Be sure to check out the list of the latest minor leaguers hot list, because that is where you will discover all of the best talent before they make it big. All right, let's talk about crypto crash. For those who are crypto bears, as if this weekend couldn't give them any more fodder, what does it mean for the systemic risk conversation about crypto? Because this sort of falls into the whole, oh, but it's so volatile. One person can put something out there, I'm looking at you, Elon, and say something about crypto, and the entire market for crypto crashes. What do you take away from this weekend?
Listen, it's a couple of things. I mean, obviously, we've seen it before, so it's not a surprise, right? There were great tweets and research done on all the corrections in crypto in the past, so this is no different. Something else that I'd like to talk about is how important it is to manage risk. Like, we identify levels. We're like, hey, if Ethereum's not above 3,600, you can't own it. If Bitcoin is below 45,000, you can't own it, right? So there's risk there. Now, they bounced since we're recording this on Monday afternoon, so they've bounced since then. Who knows what they do moving forward? But the bottom line is there was more risk after those levels were broken. So it really comes down to your own personal risk management, diamond hands and hodl and all that stuff. That's a bunch of nonsense. Those aren't actual strategies. Those are just memes. So we really have to manage risk, and today was just a nice friendly reminder of just how important that is. But from a systemic risk standpoint, I think that's really the biggest lesson. I mean, those are all great lessons, but we've learned those a million times, and we see it in other asset classes. So that's great and everything, just a nice reminder. But I think the biggest lesson out of the entire weekend, at least for me, is that there is no systemic risk yet, right? I talked to some of my smartest friends, some of the people who have talked to the smartest people and biggest portfolio managers. And while I've been in the camp that crypto is still too small to have any global macro implications, in other words, all the cryptos can go to zero tomorrow and it won't actually matter, right? In the whole scheme of things globally, I've gotten some pushback that, at 2 trillion, there is something there, right? And I don't know whether that was right or wrong. I think this weekend proved that that is wrong. I think this weekend proved that there is no system. I mean, these things were down 50, 60% off their highs, like a lot of them were. And when the futures opened on Sunday, I think their futures were up a little bit. You know what I mean? Like there was just because I thought about it for a hot second. I was on vacation in Avalon. By the way, if you've never been to Avalon, go to Avalon. I'm on vacation. I'm kind of hanging out. I'm seeing the cryptos and I'm like, all right, I wonder if this is just early selling. And then the futures, when they open up at 6 later this afternoon, they're going to get hit. And people are just already taking risk off the table. Like I thought that was a good question at the time that I didn't know the answer to. So I was like, I wonder what's going to happen later. Psh, nothing. So there's your answer. Is there systemic risk? No. Big fat no.
Okay, because we did see the two big names in crypto when it comes to Bitcoin and then Ethereum both dip over the weekend. So which crypto has your attention right now?
Listen, and that's a great point because those are two of the biggest market caps and they really got hit. So there's real systemic risk. It's going to be in those, not in the little guys. And we saw nothing. So like in any market, in stocks in particular, when stocks are selling off, what do we look for? We look for relative strength. We look for the ones that are not selling off, right? Or selling off the least. And then in crypto, it's no different. Why would we treat it any differently? And what stood out is Cardano. Cardano stood out a lot. I mean, that's been on our radar for a while. Big base, that 131, $1.30, $1.31, that level goes all the way back to the 2017, 2018 highs. And that was resistance in the first quarter in April, and we recently broke out and hit that next upside objective. So Cardano's one I like only if we're above $1.30. We're about 40, as we're recording this video, it's about $47 billion market cap, which is basically the size of Walgreens, just to put things in perspective. So Cardano, we like it ADA USD. If we're above $1.30, I like it long with a target up near 211. Can it go much higher than that? Yeah, in fact, I think it does. But for right now, $1.30, that's the risk. If we're below that, leave it alone. Above it, I like it long with a target up near 211. What do you think about that?
I like it. And I also want to know what you bought in the dip.
I bought the Cardano and I bought Ethereum. That's what I bought. So, when Ethereum broke below 3,600, I mean, I follow my own rules. All bets are off. So I sold it. That was my biggest position by far because I had been paying myself in Ethereum all year. So I was out of that. And then when I got out of that, to be honest with you, I got out of the Cardano just because let's just take the risk off the table. Bitcoin was looking toppy. I didn't know how bad things were going to get. I was going on vacation. I didn't really want to worry about that. So I got out. There was a lot of reasons why I got out. And so I was just sitting in cash. And then when I saw the crash, I remember I was at Pancake House, Brian's Pancake House. Dude, the food in Avalon is fantastic. I'm at this Pancake House and Coinbase is down. I'm like, oh my God, Coinbase is down. I'm trying to get into these cryptos. Coinbase is down. I got the Coinbase Pro. That wasn't any better. That was down too. So I was like, all right, leave it alone. When I get back after breakfast, I'll see if there's anything, that I want to pick up. And I picked up a bunch more Cardano and then half the original Ethereum position. So that's really where I'm at now. I got some Cardano, a bunch of Cardano, and half the Ethereum that I had before. And that's it. I'm in. What levels am I watching? 30,000 on the Bitcoin. If we're below that, things can get much worse. We're not below that. In Ethereum, 2250 or so, 2,000, 2250. That's the level. If we're below that, things can get really bad. Right now, as we're recording this, we're not. And the Cardano, $1.31, that's the level. If we're above that, I'm going to stay long. If we're below, then you can't be long. Right? So like anything else, we need to be disciplined and identify what levels the market is going to prove us wrong. Right? And then if it's a whipsaw and you got to get back in, you got to be willing to get back in, or just call it all together. I'm happy to have to get back in. I'd rather do that and be able to sleep at night. And that's where positioning size comes in too, right, Julie? People have massive positions. If you're not sleeping at night because you're too big.
Exactly. Be a little more conservative. All right. Bonds stopped going down. Bearish or bullish? Looks like the stocks and bonds had it right the whole time. Messy markets or not? Tell me.
Yeah, you got to be long bonds, I think, particularly if IEF is above 114. That's the cleanest level. And if the US 10-year yield breaks below 1.4, that bond trade can really, really get going. So regional banks were rolling over relative to REITs. You saw the US 10-year yield correcting, falling a little bit as well, while copper gold was breaking out. So it's like we're getting mixed signals. Which one has it right? And it appears that stocks and bonds had it right. It was the commodities that had it wrong. And as we're recording this, you're already starting to see that unwind of copper selling off relative to gold. To me, that screams buy bonds. When you saw the Milwaukee newspapers talking about inflation a couple of weeks ago, and then Barron's drops their inflation cover. I mean, people are just assuming that inflation's here. I'm hearing it from family and friends that aren't even in the market telling me about inflation. Man, I love taking the other side of that, and buying bonds gives you that exposure.
And European banks are holding in there, so that can't be bad for stocks, right?
Well, I can't imagine that with Deutsche Bank and European bank indexes making new highs, that's overall bad for the stock market. I don't see that. Like if the market was about to completely collapse, those names are going to be front and center leading the troops down to zero, and that's just not what's happening. So I think that leads me to believe that there's winners in this market, there's losers in this market. Overall, it's messy. It's been messy. We've been talking about that for a while. There's really no evidence that the mess is completely behind us. In fact, most of the evidence points to probably more of a mess at best moving forward. An epic collapse, I'm not seeing that, at least not yet. Ultimately, a breakout to new highs in stocks. The problem is, how long is it going to take? And some people are willing to sit around and wait. I am not. So gold and bonds is our preferred choice. And individual stocks that are bucking the trend, which our scans help us do that, and looking for opportunities in crypto. I mean, listen, there's a lot of investments, a lot of ways to take advantage of this market other than sitting around getting chopped up in large cap growth stocks.
Does not sound like fun. Last week you tweeted that Chardonnay was the most versatile varietal. Tell me what you think about that, and doesn't it really depend on what sort of barrels they're aging in?
That's part of it. Listen, I get a lot of pushback when I talk about Chardonnay. They're like, JC, if you can only have one grape for the rest of your life, what would it be? And when I say Chardonnay, people are like, what?
Yeah, they think you're a housewife from Orange County.
No. Chardonnay is you could do so many things. First of all, some of the best champagne in the world is made from Chardonnay, right? A Blanc de Blanc is 100% Chardonnay. So you can start there. So now you got good champagne every day for the rest of your life. Ain't nothing wrong with that. You talk about barrel and what do you say, middle-aged housewife?
Yeah.
What you're alluding to is the more buttery, secondary fermentation, oaky chard from Napa that certain wineries that we don't need to mention have made that famous. And that is one way to do that. Make it that big, that creamy popcorn, buttery chard. Some people love it. Some people hate it. For me, I think it serves a purpose. If you're having popcorn, that particular Chardonnay is actually a perfect pairing. I think you'll love it. Popcorn and that, fantastic. Other than that, it's not really for me. I like a more Chablis style, higher acid, completely the exact opposite of that buttery Napa. You can go down to the Côte d'Or and you're going to get beautiful, well-balanced Chardonnay. That's where Chardonnay is from. Like they literally invented how to do this. This is as classic as it goes. You go there. And by the way, don't sleep on the late harvest Chardonnay where you're going to get that residual sugar. They're going to leave that on the vines. It's going to turn into like little raisins. It's a nice sweet wine for dessert. It's beautiful.
Oh, now I'm thirsty. All right, JC, thank you so much for all this and so much more, plus the latest information. You can check out allstarcharts.com.
Who's your favorite baseball player of all time, Julie?
My favorite baseball player, that would have to be Gary Carter, number 8,
Wow.
The 1986 Mets.
Wow. That's aggressive. I didn't see that one coming. I know you're from New York. I didn't see that coming.